Owning a home is one of the ultimate American dreams, but in the recent years, due to skyrocketing home prices, rising interest rates, most people have had a hard time being able to afford their very first home. In this video, we will go over down payment assistance for people who may even be high income earners but can't save for a down payment, and how you can get access to down payment funds to make it work for you. This video is particularly for millennials and buyers that may own other properties out of state that don't have sufficient equity in them to pull equity out to buy another house here in the state of California or in Florida. By the end of this video, you will know what down payment assistance programs are available to you, how they work, how you can use them, and how they can help you to become a first-time home buyer without having to save money for your down payment, which we know now is harder than ever in the current environment. Before we dive into this, let's give the definition of a first-time home buyer. A first-time home buyer is anyone that has not owned a home in the last 3 years or has not been on title to a home. So to clarify, let's say you owned a home 10 years ago and all these years have passed, you could still technically be a first-time home buyer. So if that applies to you, these programs are accessible to you. In the past, down payment assistance programs were all paid for by the federal government, but in recent years, that's changed. Now we have state governments helping you qualify, and we also have private entities that have come in to help you qualify. And what do these down payment assistance programs do? Well, they provide you with a down payment for buying the home as well as covering closing costs. Now, these programs are mainly designed for low to moderate income earners. But if you live in specific areas, there may be other programs available to you as well. Lastly, the down payment assistance also goes specifically to certain professions as far as first responders, teachers, law enforcement, and even sometimes doctors. Now let's take a look at where some of the funds come from. So first, we're going to take a look at grants, which is one sort of down payment assistance, and we're also going to look at deferred loans as well. So first, let's take a look at grants. Grants are types of programs that are given to you that don't have to be repaid. And these grants will vary in different amounts and sizes, sometimes up to 3% of the purchase price. A couple of them that are very popular in the state of California is your My Home Assist, your Cal Home Assist, and your Golden Opportunities. So these grants, they're more of a reward because why? They're interest-free. They don't have to be repaid. They massively help a lot of people. And in turn for that, it makes them very competitive to get them. There's also a lot of rules and regulations you have to follow to make sure you fit in the box to get these grants. Now, any other types of down payment assistance besides our grants, these are going to be loans. These are going to be second loans. So these loans will either have a deferred payment where you don't make payments, or they'll have the option at the end to have a forgivable payment. With deferred loans, you don't have to make any payments on these loans unless these following conditions are met. Unless you sell your home, unless you refinance your home, unless you fully pay off your home, or unless sometimes you transfer title of your home on with someone else. These are great ways to secure funds for you to be able to buy your first home and then at a later date repay these loans that you took out with the equity that you gained on the property when you eventually sell later on. Now with your forgivable loans, these loans are more unique because these loans are all based off of you need to live in the property for a certain number of years. Most of the time it's 10 years. After you live in the property for 10 years, that loan that they gave you is essentially forgiven. Now there's other areas where you can buy in what's called opportunity zones, where the loans that they give you for these grants, they're also forgiven and you're also rewarded in other areas as well. But that's for a video at a later time. If you play your cards right and you actually look at these loans in a certain way, with these forgivable loans, if you live in them for the allotted number of years, they can essentially turn into grants where you now got the money for free and you end up winning all around. Now there's also tax credits that you can use with these grants as well. Now one of these programs is called a MCC. These tax credits allow you to claim a portion of the mortgage interest as a credit on your tax returns. And currently with interest rates higher, property values higher. This can save you thousands of dollars over the long run, but you want to be careful to work with somebody that knows specifically how to do the MCC tax programs. Next, there's specialized loan programs that apply to certain types of people and professions. These programs are specifically designed for like first responders, firefighters, teachers, also other types of government employees. Now, there is a site, it's not my own personal site, but this is one you can go to just for some specialized programs. It's themortgagereports.com. Take a look at that. But the specialized programs are very unique and they're mainly designed for certain people and professions, even though some programs out there will lend specifically based on race. Now let's take a look at some of the pros of using the down payment assistance program. So mainly, number one, it helps you be able to buy a house sooner without having to save money in the current economic environment. Next, by using the down payment assistance programs, it enables you to keep some of your own money you've saved for a rainy day in case things go wrong, because they do when you buy houses. And finally, these programs can actually also help you with closing costs and the down payment, which maximizes the amount of money you can save to where essentially you have more money to put away for your 401k, future dates, while still be able to get in as a homeowner under these programs. One of the final things on pros that's actually huge news for this year is you used to have a 640 and 660 FICO to use a majority of these programs. Now they've lowered that down to 620, and in some areas they even go down to 600 FICO scores. This enables a lot more people to be helped and get into homes that otherwise would be trapped in renting forever. So let's look at some of the limitations of these programs. So some of the limitations, they seem obvious, but they're really not. Some of them are, some of the areas you use them in are really not the best. It doesn't mean that you shouldn't live there. It just means it's more of a challenge. Other things that could be more challenging is the guidelines on these loan programs are somewhat more restrictive, and there's a little more rules that you have to follow. And finally, and most important, for people that don't plan ahead and they use these programs and they make the mistake of selling before the correct timeframes, they can have tax liabilities, they can lose money, and ultimately it doesn't turn out good for them. So if you are using these programs, make sure you have a game plan. Make sure you wait the number of years that you live in the house to build the equity to repay everything so that you end up winning long term. So if you want to do some of your own research, you can start by doing this in your local area. Look into your housing finance agencies, look into nonprofits in your area specific to your zip code, but mainly I would really suggest reaching out to a local lender in the area that you want to buy in, that you thoroughly research to make sure they do work with down payment assistance programs so you don't go down a rabbit hole that basically seems to never end. Something I mentioned before, but I really want to drive this home. Make sure you work with a true professional that works with DPAs, and make sure you work with someone that understands all the terms and conditions of these loans and thoroughly explains them to you so that you end up benefiting in the end. Here's how you want to get your eligibility determined. So these loans are all done as what's called full documentation loans. That means we're going to look at all your income, assets, tax returns. Everything's going to be overlooked at. When a lender sits down for these loans, they're going to have specific requirements. A lot of the requirements start with your FICO score, which goes down to 600 and 620. And other things they're going to specifically look at is your debt to income ratio. A lot of these programs require a 43% debt to income ratio or lower, even though some certain neighborhoods will allow you to go up a little bit higher, but you really want to do your research on those. So to save you a lot of time and money, make sure you know that everything's going to be looked at, from tax returns, W-2s, pay stubs, and as we mentioned, there's credit score requirements, so a lender is going to pull your credit. So to save you time, pull all these things ahead before you reach out to a lender. So in the end, down payment assistance are a great way for you to get access to home ownership with limiting your amount of funds that you put into it, and enable you to get out of the vicious cycle of being a renter forever and to be able to build wealth with your own home. If you liked and enjoyed this video, I'd really appreciate it if you could subscribe below, or if you'd like to reach out to me, please feel free to shoot me a message or give me a phone call. Thanks again for watching.